Hi guys, so this is a tutorial today for the new update, and we have included some new features. One of the features is the previous day high and lows. So for example, let's see Thursday. This was the low on Thursday, right? The whole day. So this is the day separator. So this starts Friday and we have Wednesday here. So on Thursday, when the London session opened, it made the lowest low on that day, and then it made a high when the New York session opened. It made a peak and closed at the highest price, 1720. So these are the values for this day, okay? But we carry that to the next day because these are important support resistance zones to identify where the market is going to stay for the specific day, so we can map out our strategy and know which direction we have to trade more or less. And once you know where the market is going to be and how it's behaving, obviously you can trade better whatever the strategy that you use. So now this is mainly really good for day trading, but once you learn how to day trade or see the market through the day time frame or 1 hour time frame, you can do better scalping also. So you know eventually where the market is going to be, or where is the, let's say if the market is in an uptrend, you expect the market to go up 70 to 80%, right? So if you take you're in bullish positions, so you take long positions, you're expected to win more than you lose, right? So and if the long position that you took happens to take a pullback, it's not going to go that long unless the trend changes. So more likely you're going to make more profit than you're going to lose, right? If you're trading along the trend, unless it's a swing market and you're trading reversals, or it depends, you can trade reversals in different scenarios, but we're talking about the direction of the market and how the market is going to behave. So now here we have, this is the market, right, on New York. So here we have, this is Friday, okay? So Friday opened, and in Tokyo session the market stayed below the previous high, okay? This is the Thursday high, and then got rejected around this area. And there is a reason why it got rejected and where it got rejected. I'll show you. But let's say it got rejected from here and then it started to go up. Now we can see the market is in an uptrend, right? So it's pretty difficult for the market to, if it started to, there was this small downtrend, okay, like this. And what happened is it broke that trend line from, if I can make a trend line here, 1 second. So okay, so we have this trend line from here till here, right? So around here, right? So around here, the market broke the trend line, so it started to go up. Sometimes it can make, something like this, a movement, but it didn't. So what had happened is starts to go up, and we expect it to hit this previous high and the action level, because when both are at the same place, it's more likely that the rejection is going to happen, right? And it's going to do a retest. So the more confirmation that you have, the better. So as soon as the London session opens, the market just starts, the movement starts before 30 seconds of the session opening anyway. So let's say around here, the movement, the market started to move. So we have a test on the previous high, okay, and the market gets rejected pretty badly. So we have around a lot of points here. Now we already knew that there was going to be a rejection before the rejection even happened, right? So this action level becomes more important because we had a previous high on this one. So we scalp from one level to another one, right? Or you just trailed, whatever the strategy that you follow. So if you did or not, at least we know, okay, where the market is going. So what happens is the market, before we expect the market, because here the market broke the trend line and we expect an uptrend. So what happens is that we make a kind of like a double top right here. It's an M pattern, and the market starts to go down. We expect it to break this level, right, to stay below the previous high, because it got rejected so fast, right? So this is a big, huge bullish candle, engulfing candle. So we expect the market to go this direction, right? So what happens is the market does not go this direction. Okay, so market does not go to this direction. What happens is the market gets rejected from this action level, and I'll show you why it got rejected in a moment. So the market starts to go up again, and it broke this it continued the trend line, right, and broke this level, which was the previous high, right, swing high, right, this level, and then it starts to go up, and now we know that the market is staying up for that specific day, like, because it broke this level, and it was pretty difficult for the market to even go down a little bit, and now we can expect the market to stay up. So if you go to a lower time frame, or whatever time frame that you want to trade, you know that the market is in an uptrend, so you can take any swing high or whatever strategy that you get, like bullish signal, or you have a bullish strategy for example MACD. So you have an MACD strategy, so as soon as you see the green line, you can keep starting, you can take, you know, go to the lower time frame, and you can take positions accordingly. Look at this one. If you're at 1 minute, you could have taken scalp pretty good, right? So we have rejection from the road and the action level at the same time. We have rejection here from the action level, right? This is the action level here also, and I'll show you some a better trick. So what happens is, so let's take the pivot tool. Okay, let's go here. Now the market is staying above the previous high, right, for this day. This is a pretty good indication after it has broken the level, right? It not break it again, and it stays another one, stays above or below. Now around here we have the next day, and this is just to understand how the market as an overview, right? So I'll teach you how to trade after giving you an overview. Now we have the previous high of this day, right, Friday, and today the market opened, right? So I had an idea where the market is going to go. So I had an idea that the market is going to stay above, okay, and it's going to break or at least touch this level. So something strange happened, and as soon as it happened, we adopt, right? So I traded, and I made a profit here, and then I lost a little bit here, and then once the market, we can see that this is a trend line, right? So let's draw a trend line. So we have a trend line here. So if I can draw a trend line from here, 1 second, okay. So we draw a trend line around here. So we have the previous low here, and we have the previous high here. The market is in the middle, right? So we expect the market to, because now in Tokyo session, before the London session opened, we see a trend, right? So we expect the market to continue this trend. So we trade, we take this one, this swing low, right? And then we take the swing till the next action level, or because we expect the market to hit this area, right, the previous high at least. The market did not even take, you know, it had a lot of resistance going down because we have an uptrend. What happened is, at this level, 1735, the unexpected thing happened. The market got rejected pretty badly, right? So you can say expected or unexpected. As for this strategy, this was unexpected, right? So, but we adapt, and if we lose, we immediately adapt and try to make our, you know, money back. And if you're in your, you know, risk management is pretty good for that day. Since we made profit here, we can expect to, you know, risk more. So what happened is, we're expecting from here, when it broke this level, you're expecting the market to go up and hit this level, because now we're in an uptrend, right? What happened is the market did not break this level, right? And it started to go down. So the position that I took here today ended up making I close them around this area. Okay, so that gave me a bit of loss. So, and again, after this rejection, we expected the trend to continue, took the bullish again, right? And those ended up giving us a little bit of loss. Here, because the market really moves, pretty high, it had moved. I mean, if you take a position here, it's pretty dangerous. So because it can really take a pullback, and because of the pullback, you get scared, and you have a stop loss around here, right? It can easily hit. If you had an entry around, let's say, at this level, right? So you would have your stop loss around this place. So this is pretty reasonable. But if you take a position, you don't want to miss a deal, so you can take your lot size. Let's say if you take a lot size of 1, right? You can take a lot size of 0.2. Okay, so pretty here difficult to draw on this. Okay, you can take 0.2. So that's a lot less risk. But if it crosses, let's say this level was crossed, so I could trade up, keep trading up until on each swing, because I know it's going to hit this level at least. Okay, now what happens is the market starts to go down. Okay, now the market starts to go down, and it broke this trend line, right? So now when it broke the trend line, I can expect, what do you expect? I expect the market to do maybe just like a fake out and then continue, or continue, make it start doing a downtrend. So what happened here is, this is a pretty steep fall, right? So market kept falling until it hit 1720, right? And now we can see that the market might take a pull back here, right? And then it could continue till it hits, goes down and it hits this level right here. Okay, now what we have to do, or we can do, is something even better. So what we're gonna do is, okay, so I'm back. I saw an opportunity to take a trade from here till here, right? So I just made just profit a little bit, not a little bit, around, because once it's confirmed, I can risk a big lot, right? So I risked around 5 lots, and that made a considerable amount of profit. Okay, so now what we have here is that the market starts to go in a downtrend. Now we expect that the market is going to hit this level. Now, to identify a better way is to make retracements of Fibonacci. Okay, so let's say this was the previous low, right? This was the previous low of the previous day. So we take this Fibonacci here, and I put it till here. Okay, now what you would want to do is this, right? So this is a Fibonacci template, right? You can save that template as I saved as Fib1, right? So each time I use Fibonacci, it shows me the same values that I want to see. Okay, now what are we expecting to see here? See, what happens is Fibonacci, using on daily levels, is just magical. So what you can see here is that this is a start level, and this is the end. Whatever, it doesn't matter which direction you use it, because we've the settings that I've used, it doesn't really matter. All we have to see is these lines, right? The rest doesn't really matter. So the market started, right? It started to go down, and around this level, right, this action level, the market got rejected, right? Today it did not really get rejected at this 0.6, right? So because we didn't really have a lot of movement this day, so it got rejected at the action level, 1720. Then it started to go up, and we had a rejection around 0.32. So we can already expect, if the market starts to go in this direction, right, either it's going to get rejected at this level or at this level. How? Because now, since the market has made a double bottom, right, so I am expecting the market to be in an uptrend. So if I'm expecting a pullback, where do I expect a pullback? If I see the movement before, and this is a pretty big movement, right? So let's say this is you can just try to imagine, for example, this is a long movement before there was a pullback. So now when there is another movement, you can expect almost similar movement before a pullback. So if the market moves in the similar time frame and the similar pattern, where do you expect the next pullback to be? Around this action level, right? So what it did is, because it changed a trend direction, we had a trend before. This was the highest level, right? I mean, this is the swing high. So if the market is supposed to move upwards, change direction to a long trend, right, it has to make a higher high, right? So if it makes a higher high, what is the next level before it can get rejected? It is this, or this action level, or this feeble level, right? So from here, around here, we get a rejection. And now, because we have obviously the trend line wasn't there before, so let's delete this trend line. I'm expecting a rejection around this area, but the market gets rejected before, and then it moves down, and then makes a small double bottom, right? When the market moves above this level, around this, right, 0.5, and it stays above, this is my entry around here, okay? And this was where my entry was today, okay? Because it is now getting rejected at this level. It did not even hit this level, because now we have an uptrend, right? In an uptrend, the swing lows are not that important, okay? The swing highs are most important, where we are expecting the rejection. In the swing low, we have a lot of ways to identify where it could be the bottom, right? Now we have, this was a pretty good indication, okay, around here, right, around here, that the market it did not get rejected and change the direction of the trend again, because it could be a swing market. It could start going like this, right? But we're waiting for the trend to form. So London opens, I'm waiting for the entry, and as soon as the market hits this level and gets rejected, right, it's also getting rejected from 0.5, the 50% of that day, right, the previous day. So the market starts to move up. Where do you think I should close my next position? So I take a trade from here till this feeble level, right? I'm waiting for it to get rejected, but it did not get rejected. So I close around this level, which is 1730. Now the market got rejected and start to go up, right, again. Now around here, I can see that the market got rejected around this level, right, feeble level, and also it it did a breakout to the action level. Now I can take another entry till what? Till this feeble level, right? You can see there was a rejection here, right? Now the market, what happened in the market at that time was it started to, one second. What happened to the market here is it started to consolidate. It started making these doji type of patterns of candles, right? These different type of morning star, whatever you want to call them. So it doesn't really matter. You can all call these type of these. This is just an indication of, okay, the market is stuck. So we can see the market is getting rejected from here, from this action level, and it's also getting rejected by the signal line, and the MACD is green. Now I should have taken a long position here, but because I was not sure that this action level and this feeble level is a pretty strong rejection or not, because it could pretty much just start to go down. This was a dangerous entry, but since I knew that the market is supposed to hit the highest, the previous high, this was a pretty good entry. So what happens is I miss the entry and the market starts to go up. Then because I missed the entry here, I took a small lot here, because now it's a bit dangerous to take an entry which is too late. If I took an entry here, I would have closed the position here and then look for another one if I'm scalping. But if you are, for example, just day trading, you could take a position around this area and wait for the market to either hit the action level or the FIBO level, the higher FIBO levels, not just the small ones. You wouldn't care for these levels. You could go for the previous high also. So I was expecting the market to hit this level, but it did not. But that's not an issue. So because there was a trend line like this, right? So the market is moving in a trend. The market gets rejected from 1735 pretty hard. So it starts to go down, down, down. I'm expecting the market to take a pullback, but it doesn't. So I do a lot of loss. I mean, 3 or 4 loss trades here, because these are small trades. They were not the normal size of lot that I would take on the account. So it starts to go down, it starts getting rejected here, right? So I take another position here, and that makes me I took positions here and here. So because this already broke the trend line, I would take a sell. Yeah, I took a sell from this because it broke the trend line and then it did a retest. I would take a sell because it got rejected from this action level, and I'm expecting it to go till this, because now if it broke the trend line, we're expecting the market to go down, right? So it's a downtrend now. The market now, when the market starts to starts to move in a downtrend, where is it moving towards? This is the previous low of the existing previous day. So I can start to take short positions immediately. Before I had, my sentiment was, okay, the market is going to hit this level, but no, now I can expect it to hit the previous low at least, or even break it. We don't know, but we'll see, right? Because the time has it's been already too late. So we'll see what happens at night time. So doesn't really matter. Ignore this part. Now I'm expecting this level to be hit. Whenever I can trade along the action signal line, or what I can do is extend my FIBO from here. Okay. Second. Extending the FIBO till here. Now you can see these levels. So you see the market got rejected from this level, FIBO level, and then it got rejected from the action level. Then it started to go down, then got rejected from the action level, then got rejected from the signal line. Because this is a downtrend, we can expect rejections downwards more than upwards, right? We don't really care about these rejections. We care more about these rejections, right? So if there is a signal line and there is an action level, right, this is a pretty good indication. But because it got rejected from this FIBO level, this is a bit, you would wait, or you can just risk a small lot, right? Because this is not a really great entry. We're looking for pretty good entries, because a pretty great entry would be around this level, because we have a FIBO level here coinciding with the previous day low. Now the market is moving downwards. I can expect the market to keep going downwards. You can draw these FIBO levels every day, and let me show you how would you trade the day before. Just now I saw this action level break, right, and it got rejected from this area. So I took a short scalp, right, from here till here. So this is how you trade. I mean, as a scalper, you would look for indications, and as soon as a specific indication, because I know there is a downtrend, and as soon as it got rejected from the action level, that's like a pretty straightforward scalp for me. I can just scalp from one place to, let's say, till the FIBO level here, right, from action level till the FIBO level. And I can take a pretty hefty lot, or I can take, as per the risk that I'm taking, I can take my lots, right? And not too much that you're risking your account. Maximum you can risk, if you're aggressive scalper, you can risk 5% at a time on one position, and maybe try to make 8% or 7% on that deal. All right, so we have, what do you call, okay, so the market is still moving downwards, right? So we can expect the market to hit the uh, previous low. Now let's go ahead and learn how to draw these and more. 1 second. Okay, so we have it here. So let's go till the previous low is, wow, this is a pretty, okay. Now on this day, what do we see? We see the Tokyo session open, right? And it does not break this level, right? Now here we can see this is the action, the Fibonacci level right here, and it gets rejected from the previous day high, right? So this was a pretty stop loss hunt, good stop loss hunt. So it got a start to move up, gets rejected from the previous high, goes down, right, and breaks the trend line. As soon as it broke this trend line from here, we can see the market is going up and it's going to go up. And here we have this Fibonacci level here, right? And what happens is, as soon as the market breaks this level, I am looking to you know go into a long position, because it broke this trend line and then it respected this trend line and the action level, and then it moved up. From here we expect a rejection, right? Because from the action level it could or it could not get rejected. As soon as it started getting, making the higher lows, I can take a position. Because why? I am expecting the market to hit this level at least, right? Because there was a huge movement the previous day. Now, to counter that, the market, I'm expecting huge movement on this day also, which is Friday. The market goes up, I can take a position from here till this action level. Okay, I mean, yes, this action level or this Fibonacci level. From here till I took a position till here and I closed my position. I can also take a sell from here, right? Which I missed. I should have taken a sell, but let's ignore that. Now we have 1725. So the market gets rejected again. It made a lower low, but this was pretty, fake out. It's a fake out and a stop loss hunt. So market starts to move up as soon as it crosses this action level and closes here, and then we see an opening of the candle here, right? Let's zoom in a little bit. So okay, let's zoom in. So the market gets closed here and we see a candle open around this area, right? Now here you can take a buy position till what price? Until here, this action level and 0.3, right? You've taken a position till from here, or you can just take it till here, because we are expecting, because when something like this happens, you can just risk till the double top. You can maybe there will be a double top, or maybe it'll break, so you can close your position here. From here till here you can scalp also. But if you're looking for a day trade, we can see it, since it broke this level, it's pretty difficult for it to break it again, and we can expect strong resistance here. Now the market goes up, and then it breaks this level. As soon as the market broke this level, right, I can scalp on the lower time frame, because this is a bit difficult to scalp here, right? You need to see the market more detailed, and then you can scalp till the next level, which is this level right here, and the Fibonacci level up. Now let's move here. Let's make another Fibonacci. See, this goes along with all of the existing strategies. Not like, it's just it only works. What I'm like telling you, you don't really have to trade like this. But knowing where the market is going to be gives you a complete edge. You can use any of the strategies and use this, and you would, your trading would improve significantly. Now, here, what we see is that this is the previous high of the previous day, and this is the previous low. So market opens up, right, on Thursday, and it breaks the previous low, right, because it was pretty close also. And because also you can see here the market was in a downtrend, and it breaks the previous low. This was a pretty difficult break, and then it gets rejected. And since we drew a Fibonacci level, where do we see the next? If we take a sell or a short position, where do we close our short position? It's either at this section level or this Fibonacci level. You can see the rejection here, and also got rejected at this level. Around this level, the action level, and they're kind of like coinciding, so it got rejected from here. Went up, retested the previous low, right? Now we expect the market to stay below the previous low for this day, or because the London session opened, right? So it started to pull down. This is kind of like an indication. Okay, the London market wants the market to stay up, but then it gets strong rejection because of this previous day low, right? A lot of these people who tried to, made the market go stay in this position because there was the sentiment issue. So as soon as the market moved down, everybody has a sentiment the market should stay below the previous low, but the investment that is coming from the London market is pushing the market pretty fast above the previous low, right? So what happens? The market gets rejected again from this level. It's pretty safe to take this rejection. I mean, you can stay short in this place when you see this type of movement before, right? Huge sentiment issue, but the market broke out and then starts to go up. You can take a sell. This is kind of like 95% of time it will work. So you can take a sell, and the market starts to go down. So we took a sell from here till here. We made profit, and we don't risk how long it's going to go up, right? But if you still think that because it's a downtrend, we try not to take longs on the downtrend. But if you still want to take a long position here because you see a rejection from this level, you can expect it to go to action level or the previous high, a low. Now from this previous low, the market starts to move down, and it goes till this Fibonacci level, right? And it gets rejected around this area. This is kind of like a stop loss hunt, but then it moves up, and then it gets rejected because it hasn't hit this 50% mark, right? So it hasn't hit this level. It's not necessary that it's going to hit, but the market goes up. We're not trading here, right? If we did trade, we would trade from here till here or whatever. We're not trading this pullback, I mean, a long position in a downtrend. So we can take reversals, but that's a totally different strategy, right? So for example, this was a reversal here, right? We saw the market get rejected, and then as soon as it got rejected from this action level, also the road level, we take a scalp till the center of the road. It's also coinciding with this level, right? The previous day low. And so okay, so we go down and we have market pull up a little bit, right? It continues the downtrend until here, and here when it breaks the downtrend, so we are seeing this is a trend line. Okay, so it broke the trend line here and also broke the action level, and it got rejected from 0.5. Now because of a rejection, when some rejection happens from a specific point, let's say Fibonacci action level or support resistance or something like that, and whatever technicals that you have. So I mean the price action, any price action technical that you have, the price gets rejected. We expect a trend change when the price hits a major level, right? Here the price, we already saw the sentiment as soon as the market moved down, and we got the market got a little bit of the bear power, it decreased, the bulls joined again. Okay, so the bulls were waiting for the liquidity here, and as soon as the market hit this level, they pulled the market up. The market got rejected here, but we only see one candle that was closed as a sell candle. The rest of them are positive, right? As soon as the market broke this level, right, and we saw this engulfing candle, and it broke this trend line, we are expecting the market to at least go till this level or this. So we take a scalp from here till this blue or till this. You can go to a lower time frame and trade also, right? If you want to understand more. When you have these type of candles, you go to a lower time frame, right, to see where the market is, and there are a bit of different technicals. Now the market got rejected from this level. As soon as it got rejected, it took the signal line as a support. The market moved up. When the market closed here and we see a bullish candle, it closed above. It closed once in a strong bullish candle. We saw a small reversal, right? This is kind of like a 38% or for whatever, 38 or 50%, whatever you can call it, drawing Fibonacci. And then it got rejected from here. Continued upwards and closed above the previous low. We already had the sentiment issue. We have bulls pushing the market up. They tried to push it once, and then they pushed again, and all these bears, they lost control around here, and then they pushed the third time. The bears lost, and now we see the market close here, and we have the MACD also green. Now where do we expect the market to go? The previous day high, because the sentiment is high now, right? The sentiment can change throughout the day, right? But we can know, if we can know where the market is going to be half of the day, you can be pretty sure that you're going to have a pretty good day. Now the market moved from here. Now we have an upward sentiment. It broke all these levels, and now it's an uptrend. The market goes up, 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 up. It hits this Fibonacci level. It also hits this Fibonacci level, right? It's getting rejected from action levels and Fibonacci levels at the same time. So once we have trades, we can, expect the trades. We're now expecting the market to hit the previous high. We can always take along the trend. The market goes up, this is strong, rejection goes down, 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 and it hits the road level and the action level at the same time around this previous day low. Now we can see the market wants to stay up, okay? And it took a lot of effort for it to go up, and we had these huge bullish candles, right? It's almost guaranteed that the market is going to stay, at least for that day, above the previous low. Okay, so now let's move here. So we can, this is a pretty dangerous scalp, so we're not going to take this, right? And we don't see a bit of a rejection, but as soon as the market goes up and it breaks, now it's pretty dangerous to trade. But here you can trade again because it made a higher low. You can take a position here as soon as the market closes above this action level, right? You can take a position from here till here, because there was a rejection here. You can expect a rejection again, or from this level there was a small rejection, but the market, you can also see the MACD is still red. The market starts to go up. As soon as this broke this level, it's a guarantee that it's going to hit this previous high, okay? And if you take a scalp from here till here, that would have been great also. Now we're not sure it's going to break this level, okay? But we know that market is going to hit this level. The market hits, and then it starts to go down, and we see consolidation, but it still did not break the trend, right? It's still a bit of trendy. It did not make a lower than this. We can expect the market to break this level. Now the market moves, and by the end of the day, the market is still above this level. This was a huge impulse movement. And once you're trading daily, because of these movements, we can expect a retracement also, right? or a continuation. So you draw Fibonacci levels and you can expect your levels. You don't care about where the market goes or not. So this is trading on a lower time frame. There is another way to trade on 1 hour and daily time frame, right? That would be for another video. So for now, for those of you who are, you know, scalpers in our group, a lot of people are scalpers. So this was I wanted to explain this, um, how to, you know, draw this. In future, we'll have this automatically being drawn, right? But right now, you can draw yourself, understand how this works. So when the update comes, it's easier for you to understand what's happening, and this will increase your winning a lot more than, you know, what you already. If you already knew this concept, then you know, kudos to you. But those of you who do not have this much information about this price action system, you, this is this for you. So if you have any questions, you can ask me in the group, right? And it's always great to improve the trading of everybody else. And I can see a lot of people are we've come far, and a lot of people are making a lot of profit, which is the goal, primary goal of this. And I have been busy with a lot of things lately, one after another, and I have not been able to trade, but that's fine. So these were already in works, and we have a lot more to come. This is just, you know, just a like basic foundation. So we have a lot more things to consider. So there's like what you would do is go to 1 hour time frame, right? And on 1 hour time frame, you would do a bit of analysis here. Okay, so we close this. So we have a bit of strategy where we look at a specific, you know, first 7, 8, 9 candles, and then we can decide where the market is going to stay also, right? But you can do that the same way on 5-minute time frame. But it's good to know where the whole market is going. What are the main action levels? This was the main action level here. This was the main action level here. We can see where the market is and where do we expect the market to go. Here, the market was going in a downtrend, right? Like this, right? So the market broke this downtrend, and now we can expect an uptrend. But here, what happened is we expected the market to hit this level today, right? This specific 1740, but it didn't. So it doesn't really matter. But now we can expect a swing low here, right? We can even draw Fibonacci on weekly basis, right? But let's that's for another video. So you see that the market might make if we draw the Fibonacci levels, right, we can expect where we can see or predict where the pullback is going to stop and continue an uptrend if it does, right? But this is a kind of like an indication that it's not going to stay an uptrend for long, but you never know. But our job is to understand where the market is going to have a pullback, or till where it's going to have, or at least predict. So if we go to a lower time frame, we can trade better. So this is for this video, and this is completely raw video. I have no time to edit this video, and this was just I did not plan on what to say or whatever, just because I was trading and I had a bit of time. I thought that I can just create this video. So I have no map what I said in this video. I just kept on improvising whatever I saw that you need to know. I tried to explain. So if it's a bit confusing, you can just ask questions in the group, and I'll try to later make a better video where things are more structured. So this was a pretty long video, 44 minutes. Thank you for watching, and stay tuned.